All right, well, let's move on. We have Siddarth Bhamre of Angel Broking who also joins in to give us his views on the F&O space and a couple of strategies as well. Siddarth, hi, morning. What's the sense, or rather, what is the strategy that you're advocating on the index today?
Good morning, Sonia. From positional perspective, what we are suggesting to our clients is stop shorting now. And we don't see huge downside immediately happening in this market. I'm not saying you start buying, but certainly to stop selling. So there are some negatives and there are some positives parameters in markets. Negative that FIs continue to sell in cash market segment, but that's not having a huge impact on currency. Looking at the other currencies in the world, rupee trading in a range of 66, 67. I think it's strengthened itself, which would lead to less selling by FIs. If you look at the option segment of Nifty, there we have seen that a lot of call writing happening and some amount of put buying by FIs. But interesting thing is they are not shorting index future, barring 7th of Jan, where they did short some index futures. Apart from that, there is not much of shorting taken in index futures. And whenever there is no meaningful short in index future, you don't see that trend continuation. You are still in a market where you are getting these kind of periodic moves of 600 500 points downfall and then 300 400 point upside. So despite a lot of people would talk about how 75.50 has been very crucial support and it has breached, and I agree to that, but don't expect that now it's a breakdown kind of scenario and there is a one-way fall. You would see bounce back. Many a times in last 1 year, market has given you false breakouts and fall breakdowns and given the opposite side move. And this time also, I don't think so it should be any different. I'm trying to club Bank Nifty also with my Nifty view, because that's an important index at this point of time again. We had seen last month that Bank Nifty was underperforming and made new lows compared to Nifty. This time Bank Nifty has bounced. I'm talking about yesterday's move. It has bounced nearly from those lows only, and it's looking positive. Positive not for a big upside move, but for consolidation. You are seeing some of the large cap names in private sector space where other people are also talking somewhat bullish. Even if these stocks go up by 2-3%, you will see that Bank Nifty will give support to market and market may not crash immediately.
Okay.
So putting all this data and parameters together, Lata, we are suggesting that one should not do any further shorting at current levels in this market.
Point taken. Thanks a lot for that detailed explanation. Siddarth, well, we have Anuj also joining us. Anuj, your take broadly on the indexes and what stocks you'd watch out for.
Yeah, so on the index, yesterday there was a bit of selling in index futures, about 320 crores. My sense is a bit of that was maybe towards Bank Nifty, because Nifty futures outperformed yesterday. I take Siddarth's point that the market may not have one-way fall. Today you might see a bit of a recovery again if the SGX indication is right and if we open a bit lower, but clearly the zone becomes important to watch, 75.50 to 7500. What you saw in index options was interesting. 1600 crores of buying in index options. We saw buying in both calls and puts, about 25,000 puts and 20,000 calls. So put buying was visible at 7,300 and 7,400. Call buying was visible at 7,700. So if you were to analyze this data in plain and simple terms, it tells you one thing, that 7,700 is peak for this market for short covering bounces. If the short covering bounce has to sustain above that, you'll need to see a lot of delivery based buying. So 7,700 becomes top, and maybe 7,550 or 7,500 the level to watch out for. Stocks I'm watching out for: fresh buying in Vedanta, IGL, Mindtree and Reliance Power, and fresh selling in banking names, SBI, ICICI Bank, except Axis you saw selling, and JP Associates and Tata Power. So these are some stocks I'll be watching out for.
Okay, and by the way, Anuj, we're getting some information that India has opted to bat in that first ODI in Perth. And Australia has not lost, right? They're unbeaten in the last almost 14-15 ODIs at home. So what's the sense you're getting about this one?
Australia to win. Simple. They're too strong, I think, right now.
Okay, we'll keep our eye out on that one as well. But for now, that's the update that we're getting in the F&O space. Let's do one thing. We have about a couple of minutes more to go. So let's take a break and then we'll come back with the pre-opening rates. welcome back. It's time now for our special segment, Small Cap Big Idea, where our head of research, Varinder Bansal, will find out for you some of those small companies with solid fundamentals and bankable managements. In short, companies that are likely to be the next big thing. These are not buy recommendations, I might add. But Varinder has assured us that we will fall in love with this company. So let's ask him, what's on your radar today, Varinder?
Well, Starbuck Industries, market cap of nearly 500 crores. It's a subsidiary of SPG Prince, which is a Netherlands-based company, which is an MNC company available at a market cap of only 500 crores. Now established in 1970, they're market leader in India for rotary screens and printing machines. You know, in a very simple language, they make textile machines, you know, for most of these textile companies. You talk to any textile company, you will find Starbuck as the vendor, you know, and you know, the major customers, as I said, you know, could be textile manufacturing companies, packaging, label printing companies, sugar mills. The company follows a December ending year. So look at the earnings. You know, earnings are the most important thing for this company. As I said, the company follows calendar year. So for 9 months CY15, total income was up 74% for this company. EBITDA was up 105%. Look at the margins. 14% margins for this company, and profit was up 77%. Even if you have to compare 9-month CY15 with the entire last year, that is CY14, you know, the numbers will come on your screen and that will show you for the 9-month CY16, the profit was 15.5 crores compared to the last full year of 11.6 crores. Even the sales were higher, even the EBITDA was higher. And look at the margins. For the 9 months, they did a margin of 23% compared to last full year margin of 19% only. 9-month EPS of nearly 74 rupees. CY16 expected EPS is 130 rupees. So the company will be trading around 18 times CY16. So clearly not an expensive company by any chance. Return on equity, return on net worth over 20% for this company. That's also good. It's a debt-free company, you know. Again, shareholding, if you look at it, promoter stake at 71%, again comforting. Regular dividend paying company, regular tax paying company. Dividend payout for CY14 was 28% for this company. Again, good. No equity dilution done by this company. So no equity dilution, no debt, nothing. What to watch out for this company? Again, the margins on new orders could be important to watch out for. If you're watching out for, sugar business is there, which is 10% of the sales, small, but keep an eye on that, you know, whether that is doing well or not. But otherwise, an MNC of available at 500 crores market cap with the EBITDA margins of nearly 16-70%. What more can you ask?
Oh no, you can't. And with an ROC and return on net worth almost close to 20%. At 18 times, it looks like the market has not yet discovered this stock. Clearly, one of your gems. Thank you very much, Varinder Bansal, for joining us.
The stock has had a very, very good run in the last 12 months. It's gone from, 800 rupees in the last 12 months back to 2350.
It's a 200% jump.
Yeah. You know, it's following the earnings, you know, even if you just, you know, follow the stock price, but follow the earnings. The earnings each and every quarter has been just getting stronger for this company.
Okay, so one must keep that one on your radar. It's not as if it's entirely undiscovered, as Sonia is pointing out. Somewhat discovered, but yes, there is still value in Starbuck Industries. Well, we have about half a minute to go for the pre-opening rates. Probably we'll not be able to get through with any more strategies from our guests, but the SGX Nifty is indicating a mild downtick. It's not always been a very good indicator. Let's also pull up the other Asian indices. The markets have been extremely choppy in Shanghai itself. Nikkei has not done too well this morning, but for the rest of the markets, it's been still some spots of green, at least in the Asian markets. That's Kospi, which is trying to put its head above water. And Taiwan and Straits can't really be called falling. It's actually very, very flat terrain. So markets treading water, wondering whether the Chinese argument or the Chinese recession, as Ruchir Sharma puts it, is entirely discounted, or whether the markets are still to discount some more slowness from China. Those are the first ticks, not very indicative again. It's a little bit of green, but more largely it's flat indications that we are getting from the markets. We have to wait a bit before we get a more firm indication. SGX mildly in the red, opening bids. These are not trades. Opening bids are mildly in the green. We'll just wait by for what the dollar rupee indicates, and I think it was 66.80, 81 yesterday. Okay, let's see where the markets open today. Though of course rupee has been a standout performer. It's not at all wobbled like any of the currencies, and certainly not like any of the other asset classes. 83, it's unchanged practically. The dollar is going to cost 66.83. Not much of a change in the currency markets. We'll allow the stock markets to settle down a wee bit and get back to Siddarth Bhamre actually. Siddarth, let's discuss some stocks with you. You have a buy on Bank of Baroda futures as well. That's interesting. That was one of the stocks that took it on the chin.
Yeah, in fact, most of the PSU banks did that in last 4 to 5 trading sessions. But what we have observed in BOB that there is no incremental short positions which are getting formed. And we are expecting that stock to take support at current levels and show some bounce back. Today, Lata, all 3 picks which I am giving are buy calls. Generally, the buy calls which I give has time horizon of 10 to 15 trading sessions or more. But these are short-term trading calls, not intraday, but from 3 days, 4 days perspective. And I'm expecting bounce of Bank of Baroda to bounce. That doesn't mean that I'm expecting Bank of India's of the world or Can Bank or PNB's to bounce, because there I'm seeing incremental short positions still happening. Even as a matter of fact, SBI is seeing fresh short positions getting formed. Barring 4th of Jan, we haven't seen formation of fresh shorts in Bank of Baroda, and it is very near to its strong support level. And we have seen yesterday's trading session there was substantial bounce. So I'm expecting some short covering bounce here. Go along with the target price and stop loss mentioned on your screen.
Okay, you also have a call on DLF today. Take us through that.
Yeah, so few days back around 119 odd levels, 119, 120, there was some 21-23% built up in DLF, and there was confusion that where exactly this built up is, whether it's long or short. And then next 2 trading sessions stock fell, and there was huge built up again. So it was assumed that it is more of short positions, but then we have seen huge amount of short covering taking place in DLF. We have seen HDIL in yesterday's trading session giving a breakout. DLF last 2 trading session has been consolidating around current levels. I am expecting the stock to give a decent upside, not a breakout kind of thing. Again, target price is not very aggressive. I am expecting DLF to bounce back and outperform market in next 3-4 trading sessions. So 121 is I am expecting. Fix the stop somewhere around 105 and go long over here.
And Century Textiles is also the other call that you have today.
Yes, so this is one of the few stock which is showing you, and I'm taking some support from technicals over here, that higher top, higher bottom formation. And when corrections are happening in this counter, we are not seeing any kind of short built up in FNO. In fact, recent correction from 620 odd levels to current levels, we have seen only decline in open interest, and stock is again showing strength in price. So I think this stock deserves a buy call from us, and we are suggesting that it can again bounce back to those levels from which it corrected. Around 616 is our target. Fix a stop somewhere around 551 and go long.
Okay, thanks a lot for that, Siddarth. We'll come back to you with more questions after the opening bids kind of settle down. At the moment, still very dicey, and the rupee has actually strengthened now to 66.76. So it looks like there is a little bit of strength in the air, and the Nifty and the Sensex are reflecting that. 0.4 up now, but let's not read the rates, individual rates just yet. Let's give you some more trading ideas in our segment Super 6.
First stock today is going to be Reliance Industries. This stock has managed to show some meaningful bounce back from the levels of 820, and over past few days when Nifty has been cracking, this stock has managed to provide strong support to the index. One can buy Reliance Industries with a stop loss of 1010 on downside, and the target can be expected at 1110 on upside.
Power Grid seems to have completed the retest of the triangular pattern from which it had given a breakout. The previous move was clearly an impulse move, that is a 5-wave rising structure, following which we have seen a 3-wave corrective fall. Now in that fall it has retested this triangular pattern. I believe that the stock is likely to test the levels of 156 on the upside, that is its short-term target, whereas on the lower side 139 is a very crucial support. Hence one can place the stop loss below that at 138.50.
I have a buy call on HUL. HUL has reflected near-term strength by giving a high volume upward key reversal on the daily chart. Mechanical indicators on the intraday chart have turned bullish as signaled the buy, indicating the stock's intention to appreciate further from here. One can buy HUL at its closing of around 812, stop loss of 807, target of 822.
The next stock is going to be Cell on Dr. Reddy. Overall, pharma space has been under pressure, and stocks like Lupin, Dr. Reddy has continued to move lower. We can see that there was a sharp sell-off from 4,400 levels towards the 3,000 mark, and still there is no meaningful bounce back. One can sell Dr. Reddy at current market price with a strict stop loss of 3,000 on upside, and the target can be expected at 2,830 on downside.
Second buy recommendation is on BL. BL has recovered well from yesterday's swing low and has managed to close on a positive territory. It has given a good breakout from an inside bar pattern formed on the daily charts. The stock is trading about short-term averages. I think it's quite likely to retest its previous swing high of 1379, and for that one can place a stop loss at 1306.
I have a buy call on Biocon. Biocon has reflected strength by giving an upward bar reversal on the daily chart with higher volume. Mechanical indicators on the intraday charts are supporting the move, has signaled a buy, indicating the stock's intention to appreciate further from here. One can buy Biocon at its closing of around 523, stop loss of 519, the target of 531.
Okay, so those are some trading ideas. The pre-opening rates have settled higher by about 0.3%, and the stocks that are leading it there include L&T, where there has been a Credit Suisse upgrade, Maruti Suzuki, Tata Motors and HDFC that are all up about 1 to 1.5%. But let's get Prakash Diwan into our conversation now. He has identified a couple of stocks for us as well. Prakash, hi, good morning. The long-term pick that you have identified for us today is Tin Plate Company. Tell us more about that.
That's right, Sonia. So, difficult times, you need to find some safer stocks. So I thought I'll go with the Tata name. A lot of people probably don't know this is a Tata company. It's been around for 90 years, doing the same old business of selling tin plates, manufacturing tin plates, electrolytic tin plates as they're technically called, which are food grade positive, which means you can store canned food, beverages, a lot of things, apart from the tin cans being used in things like paints and other things. Now this company, the market leader of sorts, has never lost market share ever since it's been in this business. The last couple of quarters have been extremely positive. The changes that tin as commodity prices soften globally have also kind of come down. So this, from a very simple margin profile of about 16-18%, their operating margins have moved to about 25-27%, and this first two quarters of this financial year, they've already clocked an EPS of about 4 rupees plus, as against a 3 rupee 80 paisa EPS for the full year last year. So that's operating leverage coming into the picture. It's a decent market cap, 750 crores or 900 crores of top line. Tatas don't give up their shareholding, so it's about 75%. They've been holding that on. The other thing which is changing now for them is a lot of higher end products like watches, liquor, jewelry started getting to be packed in tins and these things. So tin packaging, and it's biodegradable, it's recyclable, it's environmental friendly. So all of that is kind of positive, and luckily they don't have much of exports. So 20-25% is what they export, nothing from China or to China. So it's a dragon proof kind of a stock from that perspective as well. And what I like about this company is it's hardly got any debt. Typical Tatas just don't want to kind of take that on, don't want to expand too much also and become oversupply, in an oversupply kind of a position. The stock's available at about a 10-11 P on a trailing basis.
Oh.
Now, if that operating leverage which I am referring to comes into picture, and look at the 52-week high lows. 52 high low is 51. And high is about 71. So you really don't have a stock that's kind of gyrated between 2 points, and it's very volatile. So you play it safe, great risk reward ratio. I wouldn't be surprised if it crosses 120 in 12 months. So that's the target I have assigned right now.
Okay. Well, my earliest memory of tin and tin containers is rasgullas, so I guess it's a sweet memory. Just getting back to the markets, at this point in time, actually the markets have held on to the green for a goodish bit, and stocks like L&T are finding buying after that walloping that those stocks have got. Safe havens, NTPC continue to be in the green, as do of course consumer goods like Asian Paints. But what about the stocks, some of the yesterday stock beaten down stocks like Maruti? Should find favor now?
Oh yes, in fact every dip in Maruti, and remember it was a big fall was because of the yen appreciation, and that was a knee-jerk reaction. It would kind of recalibrate and ease out. So that's and
like 155 half to about 156, and two capital goods players, I mean, in a way they are, L&T and Vale, they are moving in tandem, suggests that at least some buying interest is coming back. Let's see how things really pan out. I'm keeping my fingers crossed because the Nifty again sort of drifting down. But Vale, of course, and L&T, these are the two you can bet apart from Reliance.
Okay, well, the aviation companies